I think the company guided to 10 to 20% revenue growth. We think they actually have a very good chance to outperform the high end of that range. I mean, all of the data points that we've seen, whether it's kind of the holiday sales, the Cyber Monday records, and all that should point to another strong holiday season, which we saw was one of the best for retailers. And with Amazon continuing to gain share, that should bode well. And you look at the Amazon Web Services division, I think that area continues to outperform. On the bottom line, I think they've guided to anywhere from 3 to 5% operating margins implied in the guidance. The one potential swing factor here is the potential impact of the wage increases that we saw starting in November. But we expect that could have anywhere from 50 to 80 basis points negative impact. But also remember, in their favor, last year we saw Prime membership increase about 20%. And that is almost pure profitability. So there's a number of potential positives here that we think should offset the potential kind of dilution from the wage increases.
Yeah, 3% gain, John, ahead of tonight's earnings. And now the sentiment much better than it was at the turn of the year when these companies got creamed. Amazon, I think, even has to show that its important holiday quarter, it's accelerating.
Yeah. I mean, the FANG trade could be back. I mean, you look at Facebook did pretty well. Netflix did pretty well. With Amazon, I think potential potholes, they did a lot of free shipping promotion right up leading into the holidays. How much did that cost them? Yes, the revenue line might be nice, but might investors be a little disappointed about that? I think the cloud setup looks pretty good, especially considering how well Microsoft did with Azure. So that's positive. But I think those costs, content acquisition, Whole Foods, free shipping costs, that can always ding you a bit. How do investors feel about that given the run-up that we've just seen in Amazon shares?
Tuna, what's your price rate and your rating on the stock?
So we have a 12-month target price of $2,000. I think, as John mentioned, I think there is sentiment about some of the cost pressures from shipping and also the whole FANG universe. But I would argue that Amazon has somewhat navigated some of those issues better than Facebook. And by the way, we're still recommending Facebook. My colleague raise his target price. But overall, I think the one thing I would point to, the free shipping that they introduced the last holiday to even non-Prime members, that was a major catalyst that we saw that they said tens of millions of members around the world actually were trying out Prime membership. So that continues to be a major kind of underpinning to our thesis.
What do you guys make of what's going on, the back and forth between them and Fedex and UPS? UPS, John, is up nicely today. They put up some good numbers, but both of those shippers have been down, and there's been a lot of discussion about Amazon now doing a lot of that last mile delivery. Does that become something that weighs on their performance? On Amazon's performance? Yeah. I don't think it weighs on their performance. It just demonstrates how much leverage Amazon has. I mean, they've got the relationship with the consumer. They've got so much trust. I think that as far as Amazon delivery, there's some consumers who are willing to use that Ring Cam and let people into their houses. Right. And then on the other side, the shippers are really relying on e-commerce a lot. We hear that in their commentary. They want to say it's not all Amazon, but we know Amazon is a big piece of that. Yeah, Tuna, anything you'd add on that?
Sure, I would look to shipping as the next frontier of the battle between Amazon and the incumbents, whether it's UPS, FedEx, et cetera. So as we speak, Amazon is spending north of 25% of its revenues on shipping and fulfillment, and that number has ramped up dramatically over the last few years, and we see the company continuing to make significant investment in logistics so that it can reduce the dependence on these incumbents, and over time, they continue to pass on a lot of those savings to consumers, and that's why you see them sustaining all of these kind of low prices across the board, and I would argue strengthening their competitive position as well.